Hey guys, quick educational video going in the Sirius Alpha, and this is about how if a level is swept multiple times, it gives it a lot more significance and priority as a signal, as an indicator of potential reversal. And I'm going to go through a lot of examples, but actually what's interesting, let's go ahead and start with the all-time high, the Bitcoin all-time high as an example. So let's take off all our indicators, go naked chart. So here's the all-time high, was right here. And price, let's go into a lower time frame to look at the all-time high retest. How many times did price fail to break that level? One time, two times, three times. Typically the third is the best short, or the third is, it doesn't always get to try it a fourth time, okay? So if we're going to break out, we should break out. This is not a good place, right? So if it sweeps once, this we can expect a second time, and then we could expect a third time to fail and not even to get up here, possibly. And it did stop in this big 4-hour fair value gap here. Let's look at the original all-time high, or the earlier all-time high, where we first hit 60. So let's go back to daily here. So we have a pivot high here, right at 58,000. And we swept it once, and we swept it twice, and we swept it three times, and we swept it four times. And depending on how you count it, we swept it a lot more times than that on the daily, because here we had a couple sweeps in here. We were all above and below that line. So I did a study of ranges. I'm not going to pull it up, but I found that usually we sweep the highs 3 to 4 times before reversing. Here's an example from this bottom here. We establish a low, and price sweeps that low twice before reversing. And part of what we're saying is the first sweep isn't necessarily that significant. Like, we had a nice bounce at the first one, but it wasn't a full-blown reversal until the second one. Over at the all-time high, we had a nice dump from the first, but it wasn't a reversal until the second, right? Back here. This failure to get over was a nice dump, but it wasn't what stuck. It was the second bigger one. We broke this again. Now we're going down, right? So the first time isn't always the best trade either. It's the second or third. Let's look at some other examples. Well, we could look at the swing high. We failed to take that once, twice. Why should the third time work? The third time's the best short. Especially, we don't need to short up here. We can wait for it to come under and then look for breakouts, breakdowns, whatever it is. Let's look at some other examples. So here maybe we have this first swing high. We sweep it a couple different times. And here, after we sweep this one a couple times, we have a nice reaction. But after not sweeping, we have a breakdown. Yeah. This one's a little bit tricky. because we keep sweeping, but if you look right here, this high, how many times does it get swept? It's like the more times, the better the trade. The first time is not always the best entrance, or needs to be considered as a scalp. Let's look at the bottom. The bottom's interesting. It actually did only sweep the actual low one time. But we can also look at some other areas here of, yeah, the bottom was a little bit tricky. We pointed this one out a number of times, but this local top before reversal, we swept this many times. And then even this low over here that happened, as we start to establish a possible pivot, we swept this on a lower time frame a number of times. On the daily, we swept it just once. But when you see price sweeping a level over and over again, it is a good sign of a reversal. Typically, for price to break a level and continue, it should do it on the first time, and it should be untested for a long period of time. We should have price come down and come above this level for a break to happen, typically. See on the breakout, this high, we never swept it. As soon as we took it, price went up, right? If price had swept it a couple times, then it's not really a good sign for continuation. So let's look at the current charts and how this might relate. So I'm going to turn off paper trading so we can make those things go away. A couple things that I'm looking at. We have this swing high over here, the August swing high. We have swept that twice. Okay. Then we have the February 1st swing high. We have swept that 1, 2, 3, 4 times. So the fourth one, the fourth one would have made a fine short here. The second one up here also would have made a fine short. Now more locally, on the daily, we have this little level here. How many times have we swept this level now? 3 times. Okay. Downside is more possible because we haven't really been adding liquidity, we've been taking it. Meanwhile, we have this low which has been swept only once. So it would make sense to come either sweep it a second time or just lose it. You know what's interesting locally is where price just rejected on a 1 hour. Is this fair value gap right here. So that's something that I'm paying attention to, of level priority, of like, why should we trade some levels and not other levels? How do we know if price is reversing? Here we swept 2 and swept 1 and kept going higher. It doesn't always work, but the second sweep, as soon as it happened, if you're in that, did make a quick short. So good. Swept it once, twice, 3 times. Then we did breakout. I feel like this is, but it became not unusual after we formed a liquidity ladder here, but we could, since it had been sweeps, we could expect this to be a big sweep. Let's look at another example here. Say this first swing high, we swept it once, we swept it twice, we swept it 3 times, we swept it 4 times. It was the 5th time. So like, the first one would have made a great trade. The second and the third could have made decent trades. Because also we're not just looking at this level, like a sweep of this is a trigger. And a sweep of this is a trigger. And a sweep of this is a trigger. And there is also a way to predict this off of fair value gaps. This little one on the 1 hour right here. I think we went a little bit higher, but no, we didn't. That was it. So that's some alpha and something that I'm paying a lot closer attention to. And in my trading model, I have ranking of levels. Like the biggest signal is an old swing high or low swept 2 or more times. An example is that is the all-time high swept 2 times, takes huge priority. The bottom swept 2 times, takes huge priority over some smaller indicator or minor level. An established range, high or low, price has been trading in, if it's sweeping it multiple times, it is a strong indicator of reversal. But again, the first one isn't always the best trade. It often works, but it doesn't necessarily run to a breakout on the other side. If it sweeps 2, 3, 4 times, it's a good thing to try to hold. A trend high or low, if price is trending in a direction and then it starts sweeping the highs or trending down, starts sweeping the lows, that's a strong signal of reversal. If there's an area within a range that has relatively equal high or lows that's inside, and it's starting to sweep those a couple times, that's a sign of reversal. Those are more important than these high time frame diagonals or a single old swing high or low, or a single range high or low, or a single trend high or low, or a relatively equal high or low, or an inside small 12-hour consolidation area, or just an inside small wick. So yeah, hope you find that useful. I'm definitely finding it interesting. Look at this low down here. We swept it once, we swept it twice, and twice was the big reversal, but we did it again on a smaller time frame where we swept it once and we swept it twice. So patience. The first entrance is usually not the best entrance. It's usually the second or the third that's the best. This bottom was kind of hard to pick, but I think just saying a strong reversal. Let's find some more examples. We already looked at that one. An example here might be this wick. How many times did we take this wick low and come back in? once, twice, 3, 4, 5 times. It's a sign of reversal. But this happening anywhere, like it's important to have that old reference point to look at. Okay, so this $9,000 bottom before a big move up. How many times did we sweep this low? 1, 2, 3, 4 times. Before a big move. Before move started. We had one pullback. We swept this. Sometimes it's just once, but it's good to pay attention to, especially if you have a strong trend. This one, I mean, here's another perfect example. How many times have we seen this? This first wick is swept how many times? Once, twice, 3 times, 4 times. The new high here is only swept once, but yeah. Okay, that's that. I'm gonna take a break now and go walk the dog and look at where we are. Well, something I want to think about, just thinking ahead, is if we sweep this a second time, then definitely need to get out of this short. And if the day ends, I could consider when the day ends, which is not that long from here now. I could consider advancing my breakdown short. This is sort of separate from what we were doing before, but oops, this one, say from right here. Well, it makes sense to advance my short right under this. It might. I would really like to see price come take this first. It seems okay to me. Going just underneath this one. Or just within even might be good. Just within this wick. I kind of like that actually. In 2 hours after the daily close. The 12-hour, we see a lot of liquidity right at 23,000, which is all the way down here. I just figure if we take this low, we we're going to start taking some lows, most likely. We don't have to, but yeah, I think I will. Wherever the daily closes, I'm going to advance my stop underneath that, or advance my entry right underneath that. And yeah, I mean, we could go both ways for sure. Okay, hope you find that useful. Much love.